Okay, what's going on, everybody? Welcome back to the channel. This is CMC Broadcasting, back with another stock market video. So we got quite a sell-off this morning and this afternoon. It looks like the SPY is kind of making a bounce back, as you guys can see over here. Apple sold off quite a bit. I'm going to show you guys on the daily chart. Apple filled a gap and hit a low of around like 106. I did buy shares of Apple today, sold some stuff to actually buy Apple just in case we're at the low. And if we're not at the low, I feel like long term, 5 years down the line, it doesn't matter. With a stock like Apple, if you got in at 105, 110, 125, really doesn't matter 5-10 years down the road. Apple's going to be a $700 stock someday. I truly believe that, and I think Apple is one of these companies that's going to change the way we live. It's going to change the world, and so I'm betting on Apple long term. But that being said, quite a sell-off. We're going to talk about my trades. I did day trade as well. I'll show you guys the P&L real quick, give you guys a quick preview. P&L is small, all right, a measly little 3.8%. We're up $35 in the account. Now, I shouldn't say that, right? For having $1,000 in the account, it's not bad, right? Being up 3%. Some people are going to wonder, well, I thought you had more money in your account. What's going on here? I took a lot. I've took a lot of the profit and put it into other accounts so that I can buy long-term shares, right? I really wanted to take advantage of this market correction and start, averaging in and getting my long terms together. So I'm going to talk about that as well. I've been tracking everything on the spreadsheets. If the spreadsheets will load here. Okay. So you can see down here, I've got like 6 different spreadsheets, 6 different accounts that I'm tracking, but it is what it is. I'll be honest, when we talk about my trades today, we're going to go over the Apple trade. But I am a little bit disappointed in myself in that I did not fully take advantage of this sell-off today. Okay, this was a very good opportunity to make a lot more money than I did. And so I'm a little upset with myself about that. I feel like there's some things that I need to tweak and sort of hone in on, right? Like my price targets, my profit targets. I got shaken out of the last trade, and I was actually right about the direction, but I got, shaken out. So, all that being said, we will get into it in further detail, but I do want to talk about the general news of the stock market right now. So this is obviously an opinion piece from Market Watch, but this guy, Larry Williams, thinks that, going into the rest of this month and in October, we're just at the start of a much bigger sell-off, right? That's according to this guy, Larry Williams. He's a very wealthy investor. He's 77 years old, so he's probably been doing it a while, and he's seen a lot of these markets. He says basically that, and this is kind of cozy how he ties it into Halloween, right? He says the bottom line is ghosts and goblins come out in the market in the run-up to Halloween, and we can expect the same this year. So the most disturbing part of this article is this right here. Expect an extended stock market sell-off. It goes, to make market calls in September, Williams turns to what he calls the Machu Picchu trade, which he discovered this signal while traveling in the ancient Inca ruins with his wife in 2014, blah, blah, blah. But he says he noticed that it's usually a great idea to sell stocks using indexes mostly on the 7th trading day before the end of September. This year, that's September 22nd, selling on this day has netted profits in short-term trades 100% of the time over the past 22 years. Williams also notes that selling on the 11th through the 20th trading day of September has been the right thing to do 80 to 95% of the time, with one exception. Sales on the 17th trading day net gains 75% of the time. Still not bad. But the main point is that this guy says we're going to have a huge market sell-off. If you are in profits, you might want to think about taking profits. And all of my EV stocks are up, right? Like if I go to my, you can see down here my portfolio. My portfolio is a little bit smaller in the number of stocks that I have because I wanted to buy these 3 shares of Apple. But you can see, I mean, I'm up, almost 32% on 5 shares of Workhorse. I'm up like 19%, 18% on CleanSpark. Had I known all these EV stocks and new energy stocks, NEO, I'm up like 4%. Had I known all these stocks were going to go up, I in hindsight, I wish I would have bought more, right? But like with a stock like Workhorse, if this will load here, I'm kind of wondering myself. Let's go to the daily chart. Is Workhorse possibly overvalued? I know they're kind of rumored to be getting a huge portion of this $6 billion contract with USPS, but it's had quite a run. You know what I mean? I got in the late teens, like 18, 19, and I'm up like 30% now, over 30%. But so I'm thinking to myself, when I read stuff like this, do I want to shave off a little bit of profit for some of my shares or all of my positions and then get in later in October? But in general, I think with the long terms, if we're going to start long-term accounts, we have to be in for the long term. My long-term account is not for trading. It's not really even for swing trading, right? When I look at my portfolio, I did sell some things so that I could buy Apple today. But when I look at my portfolio, like I want to have these stocks 5 years from now and, maybe then sell them. But this is my growth stock portfolio. And I don't even like the fact that I did have to sell some shares today, but I really wanted to get into Apple. Because I had some other things in here like Dropbox and what else did I have? Slack. I sold Nokia. So I sold some stuff so I could get the Apple, the 3 Apple shares. Altogether, I think I own like 6 shares of Apple. So, we're getting there. We're getting close to a 10 share position. But is this true? Is this not true? I'm going to leave it up to the viewers. Let me know what you think in the description down or in the comment section down below. Do you think this is just the start of a massive tech sell-off? I mean, let's look at the SPY real quick. What do you think about this? Is this just the start of the sell-off? Let me go to the daily chart here on the SPY. We're not quite at that former support area, right? I mean, this is support about 323, right? So we're not quite there yet. Let me show you something real quick on Apple's chart. Apple actually filled in a gap on the daily. For those of you that don't know, stocks, for whatever reason, they tend to want to fill in their gaps. And you can see back on, July 31st, and then, August 3rd, the stock, boom, jumped right up. And you can see right over here, there's a gap. Okay, now I'm going to put a dotted line on that gap and show you that today that gap got filled. You can see Apple came down, touched that area, right? That price point about 106.28, and then it was supported and came back up. So that's good that it closed the gap, right? That's a good thing because it gives us an idea that maybe we could be at the bottom. But I have some more bad news, okay? There's another huge gap down here, right? Between about the 95 area, right? Let me zoom into it. The 95 area to, we'll call it 100. So is it possible that Apple comes down on Monday, Tuesday, maybe sometime in September and closes this gap? I think it's absolutely possible. All right. It's not a guarantee, but it's definitely possible that we are just at the beginning of a much, longer sell-off, a bigger sell-off. And, I guess it's not bad news, right? Because if Apple went down to $95, you better believe I'm going to be wanting to buy some more shares of Apple at $95, okay? And a lot of people will still be buying Apple at $95. But what I think a lot of people are unaware of is, there's all these IPOs and stuff, these initial public offerings, and a lot of these hedge funds are dumping their tech to try to get into these new IPOs. And so I think that's contributing a little bit to what we're seeing the last couple of days, with like Snowflake. And there are some other ones that are coming out. But yeah, let me know what you guys think, right? Stock market, are we going to see more of a sell-off or what? In other news, all right, let's just kind of read and see what's going on here for today. Stocks dropped on Friday, closing out a rocky week on a soft note following a volatile session that saw big tech stocks extend a week-long sell-off, which dragged down all of Wall Street. And that's the other thing, too, is when tech goes down, the entire index, like the SPY and the QQQ, tech will drag those indexes down. All right. Amazon has been going down. Facebook is going down. I even saw shares of Microsoft were trading under $200. MSFT, I think is, yeah, look at this. Look, Microsoft, let me open up the 5-minute chart here. Microsoft was trading under it's still under $200 at 199.72. So trading under $200. Now, we are getting a little bit of a bounce here on pretty much all of the stocks, right? The entire sector, all of tech is pretty much bouncing. But I don't know. I'd like to believe we're near the bottom, right? Maybe we'll get a couple double bottoms in pre-market or after hours, I should say. Maybe pre-market on Monday. I'd like to think we're at the bottom, but we may not be. Let's see. Yeah, you've got, still workers filing for unemployment. When it comes to the economic numbers and the economic data, they can make it seem as optimistic as they want to, right? I mean, for all we know, the economy could be really, really, really bad. I've been seeing videos pop up about the housing market's about to crash, and there are canaries in the coal mine that we need to look for. The credit market, I guess you could say, and if some of these other economic signals start telling us that, hey, we're getting ready for a market crash, then I would be very, very concerned. I am following some channels. There's a channel called Best of Us Investors. He's an older guy, and he talks about the canary in the coal mine, and he seems to be keeping an eye on that kind of thing. But yeah, we're seeing these headlines over and over and over again. Technology weakness, right? I think the TikTok deal kind of affected this too, because the United States and some of the investors and the market was, I think, trying to price in, America owning TikTok, maybe even Microsoft or a company like that acquiring TikTok. And then when that didn't happen, and China basically said, oh, no, we want to be a partner. We don't want to sell our algorithm. We want to partner with U.S. I think it just messed things up, right? It just messed things up. So Dow is down more than 300 points, right? The SPY is down. The QQQ is down. What a time to be in the market. We're learning a lot, that's for sure. We're learning a lot. Another bad thing, too, this is probably dragging the markets down because I think the markets were also trying to price in a stimulus check, right? A stimulus bill and stimulus checks. I think the market was trying to price that in. And now that is looking more and more, fleeting, right? It's looking less and less like it's actually going to happen. I think that is kind of probably dragging the market's down a little bit, right? It's not to say that retail investors, because they don't have an extra $1,200, are dragging the stock market down. That's not what I'm saying. But, when you think about the investors and the institutions and, the lack of stimulus that is, expected, maybe people are dumping positions or institutions are dumping positions for reasons like that as well. So, lawmakers left for the weekend, no deal in sight. It's almost like they keep dangling the idea of a second stimulus or two stimulus checks to come. They're dangling it in the American people's face, and we just can't seem to get a deal. But, for updates on that kind of stuff, I usually follow Clear Value Tax. he seems to know, what he's talking about. Meet Kevin as well. I mean, both of them are they're raging liberals. So, if you can get through that and forgive them for their liberalism disease, those are actually two pretty good channels to watch. Some other interesting news. Ooh. No, I'm not disabling ad block. Screw that. Some other interesting news is this headline, right? Kraken becomes first crypto exchange to charter a U.S. bank. The Bitcoin cult out there, they're really excited about this kind of news, right? Because you've got a cryptocurrency firm that is networking and linking up with the banking sector. So personally, I don't think Bitcoin is going to become the world's reserve currency, right? I don't know a whole lot about Bitcoin or cryptocurrencies and stuff like that, but they're going to make the world reserve currency whatever they want it to be. And I highly doubt they're just going to allow it to be some sort of, blockchain currency that they have no control over. Like, that's just not going to happen. It seems outlandish to me. All right. And, you can hate on me in the comment section. You can disagree, but people are excited about this. Let's just read a little bit of this right here. So, on Wednesday, the Wyoming Banking Board voted to approve the San Francisco-based crypto exchange's application for a special purpose depository institution, an SPD charter. Kraken is now the first SPD bank in Wyoming. According to the Wyoming Division of Banking's General Counsel, Chris Land, Kraken will also be the first newly chartered bank in the state since 2006. Quote, by becoming a bank, we get direct access to federal payments infrastructure, and we can more seamlessly integrate banking and funding options for customers. All right. So let's see. In the wake of the July letter, the Division of Banking also announced it has been working with a Promontory Financial Group, a prominent Washington, D.C. based counseling firm made up of lawyers and former government regulators. Kraken Financial will give Kraken the ability to operate in more jurisdictions. As a state-chartered bank, Kraken now has a regulatory passport in other states without having to deal with a patchwork state-by-state compliance plan. So, yeah, the crypto markets are, I guess, in some ways making connections with banks, with the banking system. The argument with Bitcoin is that it holds some sort of intrinsic value. Warren Buffett, people like Peter Schiff, right? A lot of these older investors and economic people, they point out pretty plainly that the idea that crypto or Bitcoin has intrinsic value is pretty laughable. It may be a way of storing wealth, but you can't really buy anything with it. You can exchange it for dollars and then buy something, but that's not really using crypto to buy anything. I suppose some people might be exchanging crypto on the black market or something like that for undercover or underground purchases. But you can't use it as money, right? You can't spend it, right? For something to be money, it has to have intrinsic value. It has to be a way to store wealth, and you also have to be able to spend it, right? People have to recognize it. You need those two things, and unfortunately, for the Bitcoin, I just don't see that happening. And think about this too. Bitcoin is what is it? Let me look on here. Bitcoin is it's over 10,000, right? Let's see. Hold on. If I go to markets, cryptos. Yeah, WeBull is awesome. You can follow the cryptos. So Bitcoin right now is 10,869, almost 11,000. But let me just ask my viewers this, okay? And if you have crypto, if you have Bitcoin, let me know what you think about this. But when I look at this daily chart, let me see if I can pull up the weekly chart. I'm asking myself this. I don't have $10,000 that I can spend on Bitcoin, but if I was going to buy some, what do you call them? Satoshis. Should I be buying Bitcoin at this price, or if I was holding on Bitcoin, should I be selling it? There are some whales in Bitcoin, and you got to think that some of them are probably wondering, should I be selling this? On the weekly chart, we got kind of, like some resistance here from back in 2019, right? You've got more resistance up here at 19,000, but the point is, should you be buying Bitcoin or should you be selling it at these prices? I got a feeling a lot of these whales that are up at the top, they're going to be wanting to get out sooner or later, okay? And, I don't want to be the greater fool that some other fool is going to sell their Bitcoin to. I don't want to be that greater fool. And, I know they say the upside potential for Bitcoin is $1 million of Bitcoin, but I guess we'll have to wait and see. So anyways, just my opinions, guys, not advice, not bashing anybody who does keep crypto or Bitcoin, but I'm a little hesitant and a little sketched out, to be honest with you. It seems like one big pyramid scheme, right? One big, I guess that's what, but you could call stocks a pyramid scheme too, right? I mean, stocks are super inflated and super propped up, and all these stimulus injections and the Fed acquiring all these different securities. So, what do I know? But I'm just trying to look at all angles. In news, when it comes to the global planned demolition of, various governments and nations, you have a very serious situation supposedly unfolding in Europe. I think we're going to see this in the United States. I think it's going to get crazy, right? And then you mix the election in here too. It doesn't matter who wins the election, really. The outrage and the mob mentality and the rioting, right, on both sides after the election, especially on the left side, but, on both sides. If Biden wins, you're going to have people that are very upset about that. We don't exactly know what Trump is going to do, right? If Trump gets elected, right, you're going to have just mass rioting, cities on fire. I mean, it's going to be crazy. It's going to be like the riots from this summer times 200 if Trump gets elected. Yes, I'm worried about a Biden presidency for certain reasons, financial, economic reasons, political reasons. But, if Trump gets elected, we could be, the entire country could go up in flames. Even more so than it already is. You've got arsonists out in California. I don't want to get into all of this stuff because I'm trying to stay away from the negativity, but this is going to be absolutely crazy. Then you mix in, this kind of stuff here, and they could basically tell us whatever they want to, right? So I have a feeling we're going to see headlines like this about the United States going into the election, going into, the next year, really. And, you got to think too, with the election, they want Americans to not be confident in the results on both sides, right? They want the D and the R to have absolutely no faith in our electoral system, and they're pushing this, this idea to both sides. So I'm going to try to stay out of the mess. I'm going to try to stay out of the drama, but these are kind of the things that are going to affect the markets that we're trading in, right? I mean, it only makes sense. And then with Powell yesterday, the statements about the rates and, his kind of, I guess you could call it a lack of confirmation of economic recovery. That's obviously going to drag things down a little bit. And then with the cure, right? This magical cure. Now Fauci is betting on a cure by November or December. And when I say cure, you guys know what I'm talking about. I don't literally mean a cure. I just don't particularly feel like saying that word right now because, new channel and all. But, you got Pelosi saying that public confidence key to successful cure. if they're fast tracking this thing or buying it from China or whatever they're doing, right? I mean, Trump says it's going to be ready, and the CDC says it's not, and Trump says, oh, we don't need, the masks aren't that good. The CDC says he is wrong. I mean, this is just absolutely crazy what we're going through in these times. And I just have a feeling we're probably not going to see an actual real effort to distribute billions of these, these stabbies for at least another 6 months, maybe a year, maybe 2. Right? We know they're reorganizing the economy right now, and I just don't know if they've had enough time to fully do that, right? Have enough small businesses gone under for them to lift up the restrictions? Okay, so that's enough, jargon from me. Let's go ahead and talk about the accounts. Well, I want to talk about the day trades, actually. Let's talk about the day trades, and then we'll talk about the long-term portfolios, because I have major updates with my long-term portfolio. Look at the SPY go. Look at it go, go, go. So like I said, we're up 3.8%. Count value is now 1,038. I'm probably going to leave this money in here and just try to make it to 2,000, because I'll be honest with you, since I took, half of the money out, or over half of the money now, over half of the profits that I've made. I think I've actually taken all the profits. Yeah, I've taken all my profits out. It's been a lot harder to trade with just $1,000, right? I did get my $1,000 to 2,000, and I think I can get this 1,000 to 2,000 again as well. But it's a lot more difficult to trade. Like when I had 2,000 or 2,200 in the account, I was taking trades all day. I was taking bigger trades. So I can't wait to grow this account again and get 2,000 in it. And I'm just going to lead the 2,000. Like I said, I took the profits out so that I could start my long terms. But it's just a little bit difficult, because if you're wrong, then you only have like $600 left. And even if you're right and you don't hold long enough, you make $38. So let's look at Apple. And I'm not disrespecting the $38, but I'll tell you why I'm disappointed in myself. All right, this is today's chart. So I got in puts pretty much right at the open, right? I think it was 932, 934, 935. And then I took another trade at 947. But these three right here is where I made most of this money, right? You can see I bought the contracts for 177, 172, 166. They were weekly puts. The 106.25 put got in at 177, 173, 166. And then I sold all three of them at the same time for $1.27. Oh, sorry, $1.87. Okay, not much of a profit. It was literally about $10 on each one. And I'm going to show you where I sold these at. I sold them right here at the bottom of this green candle, okay? Right here is where I sold them, right in this, vicinity, right where this purple line is. Look how much further the stock went down. So I left a lot of money on the table today, okay? And I was thinking to myself, you should really leave a contract on there, really try to make some money today. And I got very jittery, right? This is something I need to work on with my trades, because I'm doing this over and over and over again. I'm profitable and I'm cutting my losers, right? I had all green days this week, but on Monday I made like 25, on Tuesday I made 45, on Wednesday I made 55, on Thursday I made like 111 or something, and then today I made 38. Not the strongest way to end the week. I mean, I am green, right? That's a total of it's over $250 on the week. But I could have done better, right? I know in my heart that had I, maybe been more focused and not so emotional, I should have known to hold these, right? And the reason I'm emotional about it today is because I only got the $1,000 in the account. I don't want to screw that up. I keep telling myself my strategy should be just to scalp these. And it took me 3 contracts to make, I made about $40, and then I took 2 more trades, and I lost on my last trade. We'll talk about that in a minute. But I had to spend like over $300 to make the $45. Had I spent, $600 or $700 on puts, I could have easily made about $100. See, that's what I'm trying to explain to you guys is that, the more money you have in your account, the easier it is to scalp and actually make profit, right? Because if you got $3K in your account and you spend $1K on a trade, right? Like let's say spending $300 on a trade gets you on a quick scalp like this. You get in puts and then you sell it 3 or 4 candles later. Let's say that makes you $50. Well, if you spend $1,000 on the trade, then you're making more like $200 or $250. You see what I'm saying? And then you're done for the day, right? You didn't even use your entire account amount because you have like $3K. So I hope that makes sense, right? I think I'm just going to struggle a little bit because of the small amount. And none of us know the direction of stocks. There's nothing that says, Apple couldn't have gone to 120 today. But I probably should have held at least one contract on there. And I got in again, right? I got in here. This one right here. This was another Apple 106.25 put. I got in for 188, sold it moments later for 190, right? I mean, just ridiculous that I didn't hold this. I didn't lose on it, but let me just see. What time was that? That was 9:47, and then 9:49 is when I got out. Let me see. Yeah, so this was literally moments later. Yeah, maybe I got out earlier on the first trade than I thought I did. Oh, no, hold on. 9:47, no. 9:47, 9:49. Yeah, so the first trade with the 3 puts, I got out at 3:46. So yeah, it was all within these 5-minute candles. I should have held the last one that I bought. Yes, it went up and it would have gone against me, by a few dollars. I don't know why I got shaken out of this. We had the moving average. We also had, like, when you go to look at the... So with the indicators, guys, I don't like to have my main chart. I don't like to have it cluttered up with indicators. So I have more indicators on WeBull, right? I've got the RSI, I've got the MACD. We've got a death cross forming on the MACD weekly and the daily for Apple, so that's not a very good sign. But anyways, you could see that we were trading under the 200-period moving average, which is the red line. We were trading under the VWAP, which is the volume-weighted average price. Then we were also trading under the 20-period moving average. On the 5-minute charts, on the 1-minute charts, it all looked like this. So I kind of messed up today. Even though I made money, I kind of traded poorly today. I guess for scalping, it wasn't bad, right? And if you think about the size of my account, 4%, 3%, that's not bad at all. But in context with what I'm doing, where I'm holding option contracts, and we had so much selling pressure, I should have made a lot more money today than I did. If I made $38 here, I would have made $300 here, right? And I had several times to get back in. Now, let me show you where I messed up again, okay? So I was up about $45. I think I also took a trade on, I did take a quick trade on PayPal. We won't go over that one so much, but I did take another trade on Apple, and it was when we were pretty much at the bottom, okay? I took a trade right here. It was this candle, I remember. I got in on calls because I thought we had a double bottom here, right? Bottom and then bottom. Sorry, my computer's freezing up a little bit. I thought we had a double bottom down here, and I thought it was going to go up. Right? Now, I was right. Generally, I was right. I got in calls, like one call right about here. I think I spent like the last $100 I had to spend for the day on a call. And boom! It came down below this low here, and I got out somewhere in this red candle for a small loss, like a $7 loss, including the option trading fee. But I got shaken out of the trade, right? Because we were virtually at the bottom. It did end up going up, and I could have probably made $15 or $20 on this trade. And the day's not even over. It might go up a little bit higher, right? So I kind of messed up there again, right? And I instead of having $45, I made like $38. Yesterday, too, I just want to show you guys real quick. Yesterday, I got extremely lucky. So I thought yesterday we were going to get a huge sell-off, right? So I got puts right in at the open. It ended up that the stock went up, right after the open. And so had I gotten calls, right, this would have been a nice scalp. But I had bought puts. I let it ride. I let it go $200 against me. The reason being is because I knew there was so much selling pressure from previous days. Okay. We're obviously in a downward trajectory. I knew it wasn't going to, and we have this huge supply zone up here at about 116. I knew it wasn't going to go up a whole lot. So I let this trade go about $250 against me. And then I ended up selling down. Oh, and I also scaled into my position as well. I added to the position, I should say. And now this is very, very dangerous. You typically should not do this, and I typically would not do this. But I knew in my heart of hearts that this is, it was going to be okay. And so, I bought 3 put contracts here. I bought another put contract somewhere, probably on this red candle, and then I got, I think, 2 more right here. So I had like a total of 7. I got my average cost down, and I ended up selling them right about here. Okay, and I was able to make about $107 yesterday. I was lucky. It could have gone a lot differently for me, right? We got this consolidation, right, where the stock pretty much traded sideways. Now, this would have been the perfect place to get into puts and then sell them down here. But I had gotten in around here. Then I had to get my average cost down. And then I managed to get out right here. So I'm glad I got out where I did. I could have held the puts, though, because they were weekly puts for next week. And had I held the puts, even if it did go against me a little bit, even if it went against me and at the open today I was down like $400, had I just held the puts from yesterday, right, I would have made a lot of money. So, what I'm trying to say is that I enjoy the scalping thing, right? Scalping options is a lot of fun. And it gives you something to do every day, right? It keeps me involved in the market and following the market. But I'm starting to think if I should incorporate more long-term option strategies. All right, I'm actually implementing, I'm just checking the time, damn, 37 minutes. I'm starting to implement more long-term option strategies in my father's account. And so what I'm doing is I bought calls. I bought Apple calls for October 16th. So I think I got a couple of the 130s, right? They're going for they're like $60, $59 is what you would pay right now. 54,000 people are holding these. The open interest shows you how many people are holding these. 54,000 people, almost 55,000 people are holding these 130 calls for October 16th. So I got a couple of those. I even loaded up and got a couple of these 140 calls, right? Less than $30. I think I got them for like 22 or something. I'm actually up on these now. And again, this is all in my father's account, but 40,000 people are holding these. Okay, these 140 calls for October. I also bought ExxonMobil calls as well for November. So I'm going to start incorporating more long-term call strategies into my, into my overall. I'm going to start adding that into my overall strategy. I enjoy the scalping options, but it is hard. From my experience, it's hard to make a lot of money just scalping, especially when you only have like an account with $1,000, right? Now, if I was a fortune teller and I knew how far the stocks were going to run, right, in hindsight, I could have doubled my money today, right? Had I loaded up on $1,000 worth of puts right at the open and held down here, maybe even till down here, I probably could have doubled my money. Right. And that's the frustrating part about this is because, we can't trade in hindsight. But I think by October, it's possible we could hit 130 again with Apple. And, so those were my trades for the last couple of days. Overall, this week, I really feel like I didn't take advantage of the sell-off, right? We had a sell-off all week. Let's see, Monday, Tuesday, Wednesday. No, Monday, Tuesday, Wednesday, Thursday, Friday. I mean, it was basically a sell-off all week. And I did not take advantage of it like I should have, right? I could have made a lot of money. You could have bought puts on Monday, had them go against you on, like, let's say you bought weekly puts for next week, right? The 25th of September, which I think is the date on so you could have bought these puts here, right? You could have bought these on Monday and let them go hundreds of dollars against you. And then by Wednesday and Thursday and Friday, you would have been like, I don't know, you would have made, I don't even know how to calculate. It would have been a lot of money, right? If I had bought 1,000. So what I'm saying is I want to start doing more long-term option, buying options a little bit farther out where I have more time on them. And I think that is really going to help me build real wealth. I enjoy the scalping. I want to do the scalping. Yes, I have made, let me see if my profit margin thing is here. I got it covered up right now, but yeah, I'll show it on Instagram. I've made about 17 or $1,800. So I've more than doubled my account. I've almost tripled my account's value altogether. Scalping options is very difficult. It is very risky, and the technical analysis is definitely something that you have to, learn before you get into this, and you have to have a very good risk management strategy. But it is harder, in my opinion, to build a lot of money scalping the options. I'm going to keep doing it and keep pursuing it. But, if you want to get started in options, it would behoove you to maybe get into some more longer term plays, right? The way you would do that is you would look at the daily charts, right? And you would try to be like, okay, well, where do I think this is going to be in 2 weeks? Or where do I think this is going to be in a month, right? Is Apple going to be down to $75 in a month, or is it going to be down up to 140? I got my bets on 140, and that's why I have 130 and 140 calls. So that being said, let's talk a little bit about my account rearrangements. So first of all, I started a second account. All right, I started a second account on TD Ameritrade. It has $0 in it right now, but I have started a transfer from my Robinhood account and my Ally Financial account. Those are my dividend portfolios. I've transferred them to TD Ameritrade, right? So I'm going to have my dividend portfolio on TD Ameritrade. Now, the reason for this transfer is that I can access both accounts very easily. I can see what the combined accounts, averages look like. And I enjoy TD Ameritrade. I can easily access my second account on Thinkorswim. All I got to do is just hop on over here. So in about a week, I'm going to have both of my dividend portfolios added into this second Thinkorswim account, right? So I can day trade options, and when I make some good money, I can just simply put it in TD Ameritrade, my long-term dividend account, and I can buy shares, long-term shares. Warning for people who makes transfers: whatever brokerage you're taking out of, that brokerage is going to, I guess they get offended, or it's a really weird policy, but they're going to delete your entire account, right? So Robinhood, I was very surprised to find out that Robinhood is not just transferring my stocks out, right? Because I requested a stock transfer. They took it as, I want to close the entire account. So that means they're shutting off my debit card. That means they're closing my cash account. I'm going to have to open up a new Robinhood account if I ever want to use it again. And I had unlocked all these cool features, the options trading, the debit card, come on. But I guess that's pretty typical. I called Ally Invest, and they said that yes, since I'm going to be transferring my stocks out of there too, that they're going to be closing my account. Now I do have a Roth IRA on Ally that I've never funded before, so I'm not transferring anything out of there. So they are going to let me keep that account, and so on Ally, I'm going to use my Ally Roth IRA is going to have mutual funds, indexes, maybe bonds, stuff like that. So I will be working on that portfolio. But to sum it all up, right, in about a week, this TD Ameritrade is going to have, about 10 shares of ExxonMobil. It's going to have like 3 or 4 shares of Apple in it. It's going to have a bunch of NPW and IRM and AT&T. So I'm very, very excited about that. And I'll be able to easily bring my profits from my day trading account and just transfer it internally into my long-term and buy shares. Also, let's talk about what I did on WeBull. So here's my WeBull spreadsheet. I moved all the stocks that I sold to the top here. So you can see today I sold Shill. I actually sold that one for a little bit of a profit, and I was down on that by about 10%. So I also sold Nokia. I sold Snapchat. I actually bought Snapchat and sold Snapchat all today, right? And then I sold Slack Technologies and Dropbox. All right, so the reason I sold these stocks is because Apple had gone below 110. And I desperately wanted to be in Apple so bad, all right, that I decided to sell those shares, right? Like I did some research too on Dropbox and Slack, and I'm not as bullish as I was on them a few days ago. I think it, with Microsoft and some of these bigger companies, they're going to have, Dropbox is going to have trouble with competing with these other cloud computing services and companies. Same thing with Slack Technologies work. There's other bigger companies that are doing kind of the same thing that Slack is doing. So I'm not as bullish. That's one reason I sold them. Snapchat, I did take a loss on that. But, I had spent $50 because they were going for like $25 a share. I got them for like $24.90 and $24.95. Sold them for $23.72. So I took a couple dollars loss on there. The Nokias and the Tortoise acquisition. I didn't want to sell Tortoise acquisition, the shill. But I do think they're kind of high, and they did go down on me like for the last week. Like right when I bought them, I ended up being down about, because I had 2 shares, I was down like $5 on each one. So when I saw that I was a little bit up today on them, because the whole EV market, did very, very well today. Like you can see on some of my EV stocks, we're up 33% on Workhorse. We're up on Blink Charging 14%. On Neo, we're up 4%. We're on CleanSpark, which is like microgrid, clean energy stuff. We're up 23%. So the whole EV market did very, very well. But my point is that I really wanted to get into Apple. Apple is a growth stock, in my opinion. It's a stock that I would plan on being maybe a $700 stock in 10 years. And so I really wanted to get in. So altogether now I own about 6 shares of Apple. I will have 3 shares here, and I will have 3 shares on my TD Ameritrade, my second, my dividend portfolio on TD Ameritrade. And so I got rid of those, Tortoise, Nokia, Snapchat, Slack, and Dropbox. I got rid of those stocks so that I could buy 3 shares of Apple. So what I'm holding is Workhorse, CleanSpark, Blink Charging, Neo, and Upwork, and Apple, of course. So not as much variety, not quite as much diversification, but, I plan, this account is now worth over $700. So I plan on definitely getting more of these stocks. I mean, if Workhorse can take a nice dip, I'm definitely getting in. I should have loaded up on Workhorse. I wish I had bought more shares of it. Same thing with Neo. I'm very bullish on Neo. It's like the Chinese Tesla. Apple will be good for this because Apple does pay a dividend. And even though this isn't a dividend portfolio, at least when I start acquiring more and more shares of Apple, I'll be getting some income from this account. Another dividend tech stock is INTC, Intel, that I want to probably add in this account here. I think INTC has room to run, and I'll just show you real quick. INTC, if it's going to load, let me load it up on here. So INTC had like bad earnings or something, like, I don't know, a month or so ago. And you can see it really crashed hard, right? I mean, there's a huge gap. This thing crashed hard, fell like $20. And so this, I think anything under 50 is an absolute steal. It does pay a small dividend. And so even though this is more of a growth portfolio on WeBull, it would be cool to get a couple of growth/tech dividend stocks in this portfolio. But, mostly I'm going to be focusing on the EV market. Eventually, I do want to get back into Shill. I'm going to take another look at Dropbox and Slack, but I think Upwork is I'm probably a little more bullish on Upwork, just because I think their service is a little bit more unique than Slack or Dropbox's service. But there's some gambling companies out too that I'm interested in. So this is definitely going to be kind of, this is going to be the more speculative account, right? This is going to be for speculation, for growth, and the main TD Ameritrade account will be for dividend portfolio. And then I will have Ally Financial. I also have Interactive Brokers. I kind of want to fund that account so I can day trade on it in case TD Ameritrade goes down. But I have the Ally Financial account, and in that account, I will be buying ETFs, mutual funds, bonds, stuff like that. Really super stable stuff that I can hold very, for the long term, and have a nice little Roth IRA in there. I do have a Roth IRA that I could start on WeBull, as you can see. It's not funded, but it's pretty cool. So all in all, I'm excited. I'm a little disappointed that I wasn't able to, make hundreds and hundreds of dollars this week. I guess I should be happy because I am up $250 on the week. I didn't take one red day in my day trading account. I'm up in the WeBull platform. Little disappointed that Robinhood is closing my account because I enjoyed Robinhood, right? I was still going to use Robinhood for some other plays, maybe, start up a third account in there. But because I, requested the stock transfer to TD Ameritrade, they're gonna, they got offended and they took it as, he wants to shut down his account. No, Robinhood, I didn't want to close my account and my debit card and all the features I had unlocked there, but that's just the way it goes. You'll live and you'll learn. Let me know what you guys think in the comment section down below. Did you find this video inspirational or helpful in any way? Let me know where you're putting your money. Are you investing, trading? Is it stocks, crypto, gold? Let me know where your money's at in the comment section down below. If you got any stocks that you're looking at, please do give us some leads. We'll definitely appreciate it. And if you want to follow me on social media, I am everywhere, literally everywhere. Make sure to follow the podcast too. We're going to probably start up the podcast and have some sort of Sunday night podcast type of thing. But this is what we're going to be doing, right? This is the new content. This is the new format. If you are here for it, it is much appreciated. There seems to be newer people that are showing up in the comment section and stuff. So my name is Charles. It's very nice to spend some time on my video tonight with you. I appreciate it very, very much. And with that, I hope you guys have a fantastic rest of your day. This is CMC Broadcasting. God bless.